Hey, it's Michael Saul, but everybody calls me Tiny. This video is The Bulls Need Some Help. This is stock market analysis for the week of May 27th, 2019. If you would like to receive intra-week updates, go to www.attackthemarkets.com. Put in your first name, your best email address, follow the directions, and you will be on the intra-week distribution list. Facebook group is at facebook.com/groups/attackthemarkets. If you like what you're hearing on this video, and come on, you know you do, give me a thumbs up and leave a comment so I can move up the ranks in YouTube. And to never miss a video when one, here we go, is uploaded, hit the subscribe button, smash the bell, and you'll be notified when I upload a new video. First and foremost, happy Memorial Day. Not really a big believer in these days. Memorial Day, Veterans Day. I think every day should be Memorial Day. I don't think it should take a Monday in the end of May or whatever. I guess it's always the end of May, right? In order for people to remember those that gave their all for our freedom, right? And it's not just in the U.S. A lot of other countries, I don't know if everyone does, but there are a lot of other countries that also have their own fallen heroes type of days as well. And, you know, what I really don't like about Veterans Day and Memorial Day, and for those of you who've been watching my video, you know you've heard this way too many times, but it's just an excuse for a sale. And I'm not against marketing, okay? I get it, right? If it wasn't for sales, no business would ever get done and there would be no economy, right? So I get it, but I mean, it has to be done on Memorial Day. It has to be, you know, Memorial Day is an excuse. I mean, I'm all for July 4th. Yeah, we're celebrating our freedom and all. That's great, you know. And there's nothing wrong with barbecues. There's nothing wrong with wishing a happy Memorial Day. Like, I love that. There's a lot of stuff on Facebook now and say, don't you dare say Happy Memorial Day. You know what? Kiss my ass, all right? I don't know what to tell you. But anyway, to me, every day is a day to remember those who have fallen. Every day is a day to honor the vets, okay? But, again, it's a Monday in May. The markets are closed. So let's take a look at what's going on. So the title of this video is The Bulls Need Some Help, and here we go. I mean, we hit the all-time high in the S&P 500, and then that was it. Since then, it's been pulling back. Now, we do have the 200-day moving average coming up, so if we do see further downside, I would be watching that for potential support. On the Dow, it's similar, except we already tested the 200-day moving average. Could be a small W bottom here. The NASDAQ, same thing, watch the 200-day moving average. Russell already below the 200-day. Russell continues to underperform the broad market and the mid-caps as well. So what is the excuse/reason for this? Is it sell in May and go away? Maybe. I don't think we've started a bear market or anything like a big correction, but the trade war is not going as planned. A lot of people, myself included, okay, I'm going to admit this, I thought it was just a lot of posturing. I thought that China would give in and we would be moving on, but apparently they're not going so fast. So what Wall Street hates more than anything is uncertainty, okay? And that's why, like, everybody says, oh, the public's always wrong. They're not always wrong. I remember when W. Bush went into Iraq, and everybody was like, he's going into Iraq, the market's going to rally, and boom, went into Iraq, and there it goes, right? Sent our troops into Iraq, I should say. It's a little disrespectful saying that. But anyway, he sent the troops into Iraq, and the market kept going. Why? Because it was a known thing. With the trade war, it's uncertainty, and uncertainty breeds anxiety. Anxiety breeds volatility. Increase in volatility correlates to the downside. Let's take a look at the VIX for a second, and you can see the VIX has not even gone that much higher, right? It's off its lows, sure, but you know, relatively speaking, it's higher than it was. But I wouldn't be surprised to see the VIX start to move here. I am not calling for a bear market here. I am not saying that that's it, get out of your longs. But I've been saying for months and months and months, and you can go back and look at the old videos. They're all on the YouTubes, right? Always trail your stops, because it's silly to be Pollyannish and just think, oh, we're going to go up forever. Now, I am still a bull. I still think we're going to go higher here, but right now we are pulling back. It's silly to jump in without a setup. This pullback can go further than most people expect, including me. I think it's going to go to the 200-day if it continues down, but it may go farther than that, right? There's more support down here. So wait for a signal, use stop losses, and look for something to lean into. Don't just guess and say, oh, we've gone down enough, let's stop buying. I talked to somebody like, the semiconductors are down enough. Let's take a quick look at the semis here. The semis are down enough, it's time to buy. I'm like, wait, what? What does it mean? I don't see a pattern here. Now, maybe he's right. Maybe the semiconductors zoom back up to 1600. Great. But I don't see a pattern right here. So I'm going to wait. I think it may have a little bit more to go. There's some support here. There's some support from previous resistance down here. Okay, that's not much further down, but I want to watch for a reversal candle or a reversal pattern, a couple of days worth of patterns, something to lead into. Let's take a look at some semiconductors. KLA tanker below the 200-day moving average. NVIDIA, I was looking for NVIDIA to move higher, remember? Then it came down to its support, broke down below its support, and it's continuing to go down. So watch for the bottom of this now to be tested. Here's Intel. Just really not looking that good here, although it's close to some support down here. How about something like Maxim Integrated? Again, sloppy. How about Qualcomm? Looks like the 200-day moving average coming up on Qualcomm here. What a move off the highs. I mean, this is, wow, this is just whacked here. So, a lot of 5G talk and who's the only game in town now and all this stuff, but I go with I like the news. I'm not saying the news is worthless, but I like to back it up with chart patterns, of course. All right, let's take a look at the banks. Banks aren't really getting cracked here, but they're not doing anything constructive. Here's Bank of America. Here's Citigroup. Here's JP Morgan. For now, JP Morgan looks the strongest, right, out of the three because it held the 200-day and the 50-day here. But again, if the banks start to bounce, probably one I'd look at. But for right now, I'm not really that interested. Goldman, the same thing. It's more choppy than anything. Here's the XBD. Not really doing much. So let's look at the glamour stocks. Amazon, below the 50-day. Watch the 200-day if this continues to pull back. The Zuck book down back to the 50-day moving average. Look, if we can get a bounce, this is one. Okay, Facebook. I get in trouble for calling it the Zuck book. But anyway, don't want to confuse anybody. But it looks like a pretty good pullback. Again, I want to see the market bounce before I'm jumping in. Look at Apple. It's like fading away here. I don't like the way Apple looks. I don't like the way Alphabet looks. Now, Alphabet is trying to hold on to its 200-day moving average here. So if it can hold on to the 200-day and get some release to the upside, then maybe it has a chance here. But if not, and instead it releases to the downside, you got support 1100, and then you got support down here at 1050. But watch this one. I mean, since hitting its high, really not looking so sharp here. How about Tesla? I've been staying away from this one for a while, and again, I was right. I would love to say I was really right and took it short. I did not. But this is not looking good here. 178.73 is support from 16, and then you got more 16 support down at 140 in the 141 area, 140.50, whatever it is. Doesn't matter. I'm not using exact numbers here. I'm looking at zones, but this is not looking good here. I would not be surprised to see more news come out on Tesla. What about Netflix? So Netflix is trying to hold on here, but more sideways than anything. Disney coiled up here. Full disclosure, my kids do own Disney stock. I'm not looking to sell it or anything. I don't even know how it's listed under or anything like that, and you really can't pump and dump a stock like Disney that trades this kind of volume, but I do like to disclose it nonetheless. All right, let's look at Caterpillar. It looks like maybe headed back for the lows, and John Deere as well headed back for these lows as a first try. How about bonds? So bonds rallying. Okay, it's good if you're looking into you have an adjustable rate mortgage, because with bonds rallying, interest rates are falling, and it looks like bonds can get back up to these highs from back in 2017 at 129.57. How about oil? Oil starting to pull back. Remember, the seasonal high in oil comes around the July 4th holiday. Doesn't mean it can't come earlier or later, of course. It's just an estimate when you're dealing with seasonals. And what about gold? Somebody asked me over the weekend, they said, hey, what do you think of gold now? Flight to safety? And I say, you would think so because the market's acting weak. I mean, it's not getting destroyed, but it's acting weak. But nothing's going on with gold. It's just kind of sitting here for now. So does that mean it's going to stay there? Probably not. Look at the miners all coiled up on the 200-day moving average here. So what we want to watch for here, okay, is we want to see, is it going to release to the downside here, or can we get a bounce off of it? All right, so let's do the recap. Not calling a bear, not calling for a huge correction. I still think we're going higher, but on the short term, I'm looking for more downside. Okay, watch that 200-day moving average. Again, I would like a pattern to lean into, not just a guess, oh, we've went down enough. Sign up for the intraweek update list at attackthemarkets.com. Don't forget to give me a like and smash the bell to receive updates when a new video is uploaded. And if you have any questions, tiny@attackthemarkets.com. Have a great week. I will talk to you in the intra-week updates or in next week's video.